Every time frame that you see on TradingView has its purpose. Now what this means is this: if you see the 1 minute time frame, it has its purpose. If you see the 1 hour time frame, it has its purpose. If you see the daily time frame, it as well has its purpose. Likewise, as if you see the monthly time frame, they all have its purpose. Your duty as a trader is to understand the purpose of each and every one of each time frame and use it to your advantage. Now, for example, if you're a day trader, you simply want to understand the time frame that will be for your buyers and the one that will be for your entries. In this video, I'm going to be showing you how I often trade, and as well, I'm going to be showing you how I use each and every one of these time frame to understand my buyers and as well to know my entry. But before going to that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and I'm going to show you the mindset behind my strategy. If you want to see something like this, I want you to smash the subscribe button. I'll be right back.
Now, let's for instance analyze USD-CHF. Remember, you want to understand the purpose of every time frame, and particularly as a day trader, every time frame for you has its purpose, and you want to start from the higher time frame down to the lower time frame. Now, I'm going to be showing you how to use multiple time frame to understand where to put your entry and as well where to put your exits. First of all, we want to use the higher time frame. It can be daily time frame or weekly time frame, but let's not go too far. Let's start with the daily time frame. We want to understand the purpose of daily time frame. Now, the purpose of daily time frame is for you to understand direction of the market and as well where the key levels are in the market, and it's a way to do it. Let me show you right away. Now, on daily time frame, you want to identify the obvious high and the obvious low you can see by simply zooming in. I'll be zooming out here. You have to zoom in properly. When you have zoomed properly, you want to use your trend line to identify the obvious swing and the obvious low. Now, if you have to look at this price action at this point here, you can see that this point is the highest point here, the highest swing high you can see clearly, and this point is the highest swing low you can see. So our focus now is basically on this highest swing point and highest swing low here. How the price move. We want to simply use our support and resistance to understand how price moved from this highest point to this lowest point and be able to determine where price was going to. And how do we do that? We simply want to use our trend line here and identify this point to be our point of support. Right? This point is our point of support. Remember what a valid support is: the ability to have plenty touches on a particular trend. And looking at this point here, you can see that this point is point 1, 2, 3, 4, which is very valid for a support. Now, for every support, there's always a resistance. And for us to identify the resistance, we want to also do the same thing that we did for the support. And how do we do that? We simply use our trend line and be able to identify that this point are touches. First, you can see 1, 2, 3, 4, 5 touches. So it's a very valid support and resistance we have identified here. And now, for us to interpret this support and resistance, we can clearly see that price is going to the downside because price is respecting support and price is respecting what? Resistance. Now, having identified this resistance and support, we want to identify the key levels. And key levels are simply areas where price is likely going to make a reaction from. And for us to do that, we want to simply use this point here that you can see clearly here as our support key level here, and this point here as our resistance key level. So what this means that we have identified where our support key level is, we have identified where our resistance key level is, and we have also interpreted what price is doing by simply knowing that price was going to the downside, because price is respecting every point of support and every point of resistance. Now, that is all for daily time frame. We have already taken the information we want to understand on daily time frame, and remember to always keep it very simple. Simple is more. When you keep it simple, you tend to understand what you're doing on the chart, right? Now, having understood what I've done on the daily time frame, I want to simply go to the 4 hours time frame. We're going to be identifying two things on the 4 hours time frame. That means the purpose of the 4 hours time frame is to identify where the market structure is and as well where the supply and demand zone are, and where we want to be looking for it from this point of key level to this other point of key level. That means we're going to be looking for these two things on this point of key level and this point of key level on the 4 hours time frame. So I'm going to switch to the 4 hours time frame right now. Now remember what these lines are. point of key levels, or let's call it key levels. How the price move from this point to this point, and how its price move from this point down to this point. Then we can know what to do next from here. Now, for us to identify the market structure, we can clearly see that this point is a swing low, this is a swing high, this is a swing low, this is a swing high, this is another swing low, and this is the swing high. Now, we want to identify the recent swing high and as well the recent swing low. And you can see this point is the recent swing low, whereas the recent key level is the recent swing high. So basically, on this particular 4 hours time frame, we've identified the market structure. We are seeing at this point price is an uptrend, but currently price has gotten to the recent key level and price is going to the downtrend, right? Having identified that, we want to also identify the structure price is creating since price got to this resistance key level here. Remember, when price got to this support key level here, price started giving us higher highs and higher lows. And now when price got to this resistance key level, price is beginning to give us a what? Lower lows and lower high. So how do we identify that lower lows and lower high? Let's do that together. Now clearly see at this point, you can see at this point is the high. Here is the low, high, low, high. So basically, the recent high on this point now is simply at this point here, right? Because price is giving us lower lows and lower highs. This is the recent swing high that price gave us, and this is the low that price took out. And now what this means is this: price is simply in a downtrend at this point here, and price is likely going to retrace for a while before price are going to the downside. Correct? Yes, because price is basically in a downtrend, and price is moving from this resistance key level down to this what? Support key level. Having understood that, now I want to identify the supply and demand zone in this area here, right? Let me zoom in properly. Now I want to identify how price move from this point to this point. How the price move, where are the supply zones and where are the demand zone. Now, having understood what supply zone and demand zone is, we can clearly see that this point here is a point of supply. This point here is a point of supply, right? And this is the recent what? Supply. Drop, base, drop. This point is a point of supply, right? And now when price give us this drop, base, drop, price give us a retracement. And how did this retracement move? It gave us a what? A rally, a base, and a rally. So this point is also a point of demand. Remember, we have to identify the both supply and both demand, even if price is up or down. We want to identify those points of demand and point of supply. Now looking at this point, now I've identified that this point is a point of supply, and this point is also a point of what? Demand. What I want to basically do now is to refine these two zones for an entry, right? Now we want to do that on the 1 hour time frame. Remember what we did on the daily time frame and what we did on the 4 hours time frame. Now on the 1 hour time frame, we want to basically understand or refine these supply zones to become point of interest, right? And also we want to identify what? Liquidity. We're basically identifying point of interest and what identifying what? Liquidity on the what? 1 hour time frame. Now looking at this point now, for us to define this zone, I want to basically use a particular or a specific candlestick to represent these zones. And having to do that, we'll simply say at this point here, there's series of dotted candlestick here. So this point is also a point of what? Supply zone that I will be refined to what? A point of interest, right? So I'm going to put this stuff to the other end here. Now having to also do this, I want to also define this demand zone here for a rally, a base, and a rally. So for us to define this zone, we want to simply represent it with this obvious dragonfly that appeared at this point here. There's a reason it came out. There's a reason why that candlestick appeared at that point there. We want to always take notice of those particular candlesticks. Now I haven't done that. Now what I want to basically do now is to what? Pull this to the other side as well too. Now remember what a flip zone is. A flip zone is simply a supply or demand zone that failed. That means if a demand zone fails to hold, it becomes a flip zone for a what? Supply zone. So basically, refining this whole point now, you can see that we've identified two supply zones at this point. This one here, and as well this one at this point here, right? Now, what we want to do next? Now, I want to simply understand how price is behaving at this point now. To basically use liquidity to take our entry, right? And now, if you understand how liquidity works, liquidity is simply a fake move that induces people to buy into a buying market, buy into a selling market so that price can sell off. That's a very tough one for you to understand at this very critical level. But I want you to bear in mind that liquidity is simply the fake move that price have to move to take out people's stop losses, and as well to make the actual move that price want to really make. There are two different types of liquidity: liquidity sweep and liquidity grab. right? So basically, you want to understand what price is doing at this whole zone here to understand if the supply zone is going to hold or if it's not going to hold. And for us to do that, we want to simply understand what price is doing from this point on the 15 minutes time frame. Anything below the 1 hour time frame is simply refers to as lower time frame, but anything above the 1 hour time frame is simply refers to as what? Higher time frame. I want to also bear that in mind. Now, what is price doing below this supply zone for us to know if it's going to hold? Now, mainly looking at this point, we can see that price is simply inducing faster liquidity. That means price is simply inducing the upside liquidity, giving people hope to buy. People are buying at this trend because price is simply giving us a higher high, higher low, higher high, higher low. That means price is inducing people to buy. And now because price is inducing people to buy, people are putting their stop loss at this point here. The stop loss, sorry. The stop loss at this point here. So this trend now is basically acting as a what? Liquidity or trader liquidity, whatever you call it, was acting as a what? Liquidity. People are putting their stop loss at this point, stop losses, stop losses, stop losses, and people are buying this market. Now, this is supply one at this point here. For us to make an entry on this point, now I want to simply see price come back to this point here. I want to simply see price come back to this point here and induce an equal highs for us. Now, if price comes to this point and give us an equal high, then we'll be looking for a sell, right? So basically, if price open tomorrow being Monday, what I want to basically do is this: I want price to keep on buying to the upside and possibly induce an equal high at this point, and then possibly take a sell entry, right? Now, my entry is going to be on the 1 hour time frame because that's where it's more value for me. I want to basically see price buy to this point here, and possibly my entry is likely going to be a short from this point at this point here. My stop loss right above this point here, right? And I'm going to be targeting this point as my TP1, right? TP1, and possibly at this point here as my full TP. So basically, an entry on this pair now is simply wait for price to buy for a while. That means if price open tomorrow will be Monday, I want to likely see price buy to the upside. And when price buy to this upside and possibly tap into this supply zone at this point here, then I'm looking for a sell to the downside. So this is how you simply use the higher time frame, 4 hours time frame, 1 hour time frame, and 15 minutes time frame to confirm your entries and make execution on the chart. But it's not always as easy as this. You have to be able to spend time with it for you to understand it very well, or for you to understand how to use it properly. So I want you to always go back and study the outcome of every trade I analyze on this my channel and see how it played out and be able to make decisions while trading or while backtesting your strategy. I think this will be all for this video. I'll see you in the next one. Peace.